There is no information indicating a recent decline in Tesla shares. Greetings to all, and thanks for returning to Everything Tesla stock. The price of Tesla stock has fallen multiple times in the preceding months. Fortunately, Tesla is about to embark on a major project that, if successful, may push the company's shares to as high as $52,000 in the upcoming months. Analysts believe that this will be the action that drives the stock price to its maximum, and ideally, that will cause Tesla stock to soar above $52,000. What is the next major development in Tesla that will send the stock price soaring into the thousands? Can Tesla stock truly reach this high? Let's investigate. Please remember to hit the like button and subscribe to our channel if you enjoyed this kind of content before we begin. Remember to enable notifications as well if you want to be informed about all that Tesla is up to. An unprecedented artificial intelligence feature is about to be released by Tesla. Elon Musk, the CEO of the electric vehicle firm, recently revealed that Tesla will soon start mass-producing the robotaxi, an autonomous car with a self-driving function. Because these robotaxis are meant to function without a pedal board or steering wheel, human drivers won't be needed. The goal of the initiative, according to Musk, is to offer consumers the least expensive transportation per mile. A robotaxi ride would be more affordable than a bus or even a subway ticket. The creator of Tesla previously said that the company's ultra-performance Cybertruck is scheduled to go into production in 2023. A few months from now, the vehicle, which aims to combine the functionality of a truck with the speed of a sports car, will go on sale. It was first unveiled in 2019. The robotaxi project of Tesla is scheduled to enter commercial production in 2024. Product announcements are expected in 2023. If this effort is successful, a straightforward over-the-air software update will enable Tesla to seamlessly integrate robotaxis into the majority of its produced car models. Naturally, this new update will cost extra, but according to Musk, given its distinctiveness and high-tech value, a robotaxi may fetch up to $12,000 on the market. Thanks to this innovation, Tesla's finances and overall net worth will improve significantly, which will be a major growth driver for the company. In related news, Musk also disclosed his intentions to create Optimus, a humanoid robot that he believes would be more valuable than fully autonomous driving, FSD, technology and the auto industry as a whole. Investors anticipate these innovative and exciting developments that Musk has planned for Tesla, and based on the project's potential in the future, it is highly unlikely that the outcomes will be anything less than remarkable. Numerous encouraging changes are occurring at Tesla, indicating that the company is headed toward greater success. If these activities are carried out effectively, the price of Tesla stock might rise to $52,000 in the future. Among these projects is Tesla's intention to produce its own chips. Like the majority of EV firms, Tesla's production is dependent on the availability of chips worldwide. As a result, the present chip scarcity has had a significant impact on the company, leading to the closure of some businesses. Consequently, having a chip supply chain would not only provide Tesla with a competitive edge over other EV businesses, but it will also guarantee the company's future as a top automaker. Tesla declared in October 2021 that lithium-ion batteries would be used for its standard range of electric vehicles worldwide. Because of its long lifespan, over 5 years, quick charging speed, and great temperature resistance, the lithium battery is regarded as sustainable. In comparison to other electric vehicles, Tesla cars will now be more durable and have longer battery lives. The major drawback, though, is that EV businesses are susceptible to supply chain issues, which are currently a persistent inflationary issue, mostly brought on by the Russia-Ukraine situation. According to Musk, this issue has caused a sharp rise in pricing, a decrease in output, and even a postponement of the introduction of projects such as the Roadster and Cybertruck. Tesla's stock price will undoubtedly be impacted by its promising future growth trajectory and enormous growth potential. The business has experienced several growths in various areas, and it is already dominating the EV market as a whole. Along with a significant growth in production and distribution, the company's net cash flow has increased. After the automaker's astounding first quarter financial performance, investors were filled with optimism and high expectations for significant returns on their investments. In addition, Tesla has expanded its reach internationally, surpassing the projections of prominent stock analysts, including those on Wall Street. It is not, however, a constant state of happiness, just like any business. Tesla's stock price had been rising steadily until recently, but it has now dropped sharply from its record high in November 2021 to its lowest price of $620.57 a share. The stock fell by 42%, making it the seventh worst performing stock in the S&P 500 at the time. This decrease was compounded by a 26% decline in the S&P 500 consumer directory sector. In comparison to the majority of other significant tech growth stocks, such as Apple and Amazon.com Incorporated, it also underperformed. Many investors sold out their equities as a result of this downturn. Investors became even more skeptical of Elon Musk's purported assertions that he had obtained large personal loans linked to the value of Tesla's shares in order to obtain funding, fearing that this would merely cause the stock to fall too low and negatively impact the company's finances. Even with the recent decline in Tesla's stock price, some investors remain optimistic about the future. Analysts' bullish predictions are hard to dismiss because there are a lot of technologies in the works that could turn into future Tesla gold mines. Notwithstanding the difficulties, Tesla intends to keep raising production and entering new markets. The use of Tesla vehicles has expanded globally as a result of this expansion, and the corporation will profit more from the increased number of Tesla vehicle sales. Tesla has made a massive entry into the Japanese market. Initially, the corporation had to deal with a number of issues, including the high price of electric automobiles in comparison to gasoline-powered vehicles and the scarcity of charging facilities. But with the addition of more charging stations and the introduction of discounts and subsidies for some of their products, these difficulties were quickly resolved. These tactics enabled Tesla to expand and rise to prominence as one of Japan's leading automakers. Further solidifying Tesla's position in Japan is the company's oldest battery supplier, Panasonic, a well-known electric vehicle manufacturer. The business declared that it will shortly start producing the 4680, a new-capacity lithium-ion battery for electric cars in Japan. The energy firm announced that mass production will start in the fiscal year that ends in March 2024. After Panasonic recently handed Tesla prototypes of the potent 4680 battery, which will shortly begin manufacturing in Japan before being relocated to North America, both brands have already put things in motion. With any luck, Tesla will come out on top and be able to grow both the number of cars it produces and delivers. Despite Tesla's success in Japan, the story in China is different due to the sheer volume of competitors. About 80% of the production input used by EV firms comes from China, which also plays a significant role as a supply chain distributor. As a result, Tesla's production capacity may benefit from its entry into the Chinese market. Even while Tesla is by far the most well-known and a globally renowned EV firm, it will still need to work a little harder to build its own client base given the fierce competition in China's EV market. China, a center of technology, offers a rich market for electric cars, but it is difficult to ignore the fierce rivalry from Chinese EV manufacturers, the majority of which have shown over time that they can perform on par with Tesla in terms of deliveries and earnings. Since any production loss can have a significant impact on the company's margins and earnings, the production struggles in China have caused constant discouragement for Tesla, despite investor hope that the company can overcome the competition and establish itself as a major player in China, as it did in Japan. On the other hand, Tesla has prospered in places like Iceland. There is no denying that Tesla faces difficulties, even with the abundance of supercharger stations in the nation, and these have somewhat impacted the company's stock price. Similar to other investments, there is a constant mix of rising and falling trends. However, historical data indicates that Tesla will continue to have strong future growth. One of the many benefits that keep Tesla at the forefront of the industry despite the growing number of competitors is its infrastructure for charging. It will take years for other EV businesses to surpass Tesla's record as the owner of the largest global fast charging network. With further enhancements, improved infrastructure, and increased global market penetration, Tesla's financials might continue to be superior to those of its rivals. Greater milestones could be reached by the EV company, which could eventually drive up the stock price to $52,000. However, what are your thoughts? Please share your thoughts in the space below. Additionally, while you're here, click on any of these two videos to view it on your screen. I'll see you over there.